Why is income tax of interest to a forest landowner? Because any expenses paid or income received from forest operations have an income tax impact that can have a significant effect on your return on investment. The first issue to decide is whether you're going to operate as a business or hold the property as an investment. The advantage of operating as a business is the opportunity to use expenses to offset other income. This is important because the Internal Revenue Code allows for the current deduction as opposed to capitalization of most of the expenses associated with forest operations. Two related issues are whether your investment is at risk and whether you materially participate in the forest operations, which are also required to deduct losses against other income. Probably the most important tax issue is determining your basis in the land and timber. Basis is your investment or a prior owner's investment in the property, and the return of basis is not a taxable transaction. In other words, if you sell timber worth $10,000 and your basis was $4,000, you would only pay tax on the income of $6,000. If you purchase the property, your basis is the total price paid for the property plus any expenses associated with the purchase, such as consulting forester, surveyor, or legal expenses. If your parents gifted the property to you, then your basis is their basis plus any gift taxes paid on the appreciation. For example, your parents purchased the property in 1960 for $25,000, and today it is worth $100,000. Your basis in the gifted property is $25,000. If you acquired the property as a result of someone's death, then your basis is the fair market value of the property at the date of death, or in the previous example, $100,000. We used to say step up in basis to fair market value date of death, but some property values have decreased. Once you know your basis in the property, the basis has to be allocated among the land, trees, and any other depreciable assets on the property. Your basis has to be allocated proportionately based on the fair market value of the assets. In other words, you cannot arbitrarily allocate a larger amount of the basis to the timber. The basis allocated to the timber is usually further subdivided into accounts such as saw timber, pulpwood, pre-merchantable, and regeneration to accelerate the tax benefits. For example, saw timber has a higher fair market value, so it would be reasonable to allocate a larger portion of the basis to that account. Saw timber will probably be harvested sooner, so your basis or income that is not taxable will be recovered faster, which will increase the rate of return on your property. The IRS provides a 4-part form, Form T, that should be used to record the purchase, basis determination, and basis allocation for each property that you purchase. You are not required to file Form T when you purchase property, but the IRS states that you have to determine the information required on the form, so you should complete Part 1 of Form T. A parcel of land can be divided into blocks or separate depletion units called single identifiable properties. Blocks may be more efficient for claiming basis and expensing replanting. Prior to 2005, you had to sell your timber with a retained economic interest to qualify for capital gains treatment. Section 631 was amended to allow lump sum sales to qualify for capital gains treatment for sales after December 31st, 2004. To qualify for long-term capital gains, you must have owned the asset for the holding period, currently 1 year. To determine the amount of proceeds that are taxable, you would deduct your investment or basis in the trees harvested by calculating a depletion allowance. The investment in a capital asset or basis is normally recovered through an annual depreciation write-off with the amount calculated under the modified accelerated cost recovery system. Depreciation is not available for natural resources. Instead, a depletion allowance is calculated each time timber is harvested. The format for calculating the depletion allowance is included in Part 2 of Form T, which must be included with your tax return when claiming a depletion deduction. Depletion changes each year because the amount invested usually remains constant, but the volume of timber changes each year with growth. For example, when you purchased the land, there were 10,000 tons of pulpwood with a basis of $50,000 or $5 per ton. 5 years later, when you harvest the trees, there were 12,000 tons, but the basis is still $50,000, so the depletion allowance is now $4.17 per ton instead of the original $5 per ton. Another somewhat recent change, October 22, 2004, is the opportunity to expense the cost of stand establishment. Reforestation includes site preparation as well as replanting. Up to $10,000 may be expensed for any taxable year with respect to each qualified timber property. For example, if two 40-acre tracts were harvested and they were separate depletion blocks, then $20,000 could be expensed, $10,000 for each of the properties. Any amount over $10,000 can be amortized over the following 84 months. To maximize the benefit, the site preparation could be conducted in July, which would be year 1, with replanting the following January, which would be year 2, to expense $20,000 for one block. Maintenance costs are incurred for the management, maintenance, and protection of the timber stand and are considered ordinary and necessary under Section 162. Amounts incurred for labor and materials for fire, disease, insect, and brush control are deductible. Post-establishment fertilization is also performed for the management, maintenance, and protection of the timber stand and are held to be ordinary and necessary expenses deductible under Section 162. Operating expenses such as fees paid to consulting foresters, other professional fees, salaries for labor, and travel expenses related to the management of the property are also deductible. The deductibility of a timber cruise depends on the purpose. The costs incurred in connection with a purchase are a capital expenditure and must be added to the basis of the acquired timber. Expenses incurred for a cruise not made in contemplation of a purchase or sale and for the purpose of determining the type, quantities, location, and growth possibilities of the timber have been determined to be an ordinary operating expense which would be deductible. Surveys to defend title must be capitalized into the land account. A survey done to reestablish a lost property line should be deductible. To be depreciable or amortizable, property must have a useful life to the taxpayer that is determinable. For a permanent road, the roadbed should be useful for an indefinite period of time and therefore is not depreciable. So the cost of clearing, grubbing, and rough cut and fill should be placed in a non-depreciable account. Improvements to a permanent road, such as culverts and bridges, do have a useful life and are depreciable. The recovery period for land improvements, such as drainage facilities, bridges, and fencing, is 15 years. If the road is meant to be temporary, for example, a road that is conducted for timber harvesting with the intent that it be reclaimed and planted, then it has a useful life and may be depreciated. Timber production is usually a business or entered into for profit, and so ordinary losses would be deductible whether there was a casualty involved or not. The income tax effect of having the loss associated with a casualty is that it provides for the separation of the ordinary, as opposed to the long-term capital, loss from the deferment of income from salvage operations if the income is reinvested in similar assets, called an involuntary conversion under Section 1033. In other words, the casualty loss and subsequent sale of timber are separate events and need not be combined and set off for tax purposes. If an owner exchanges real property rather than selling one parcel and purchasing another, he can defer the tax on the gain. The process is not as simple as it sounds, and you should obtain tax advice before starting the transaction. You do not eliminate the tax, only defer it to a later sale, unless you happen to leave it to someone in your estate and they get a step up in basis. The preceding list is barely an introduction to income tax issues. You should consult an income tax professional before proceeding with any of these operations. Also, there are 5 timber tax workshops being offered in February and March, and you can find additional information on them on the AFOA webpage. Thank you for your attention.